Also unveiled in the budget today, an updated assurance package to the tune of 9.6 billion Singapore dollars. That's up from 6.6 billion previously. The enhancements reflect the commitment of the government to help Singaporeans with the rising costs of living. At first, cash payouts. For those aged between 21 and 54, they stand to receive up to 1,700 Sing dollars this year. Those 55 years and older could get up to $2,300. Now, the money comes from the enhanced permanent GST Voucher scheme and assurance package, which includes a one-off cost of living special payment. There will also be top-ups to MediSave accounts. Now, those 20 years old and below will get $150, while people aged 55 and older will receive between $150 and $600. To help parents with the cost of raising children, there will be a $400 top-up to the Child Development Account. The funds can be used to pay for educational and healthcare expenses. Students will also get a $300 top-up to their EduSave and post-secondary education accounts. Now, apart from the $300 CDC vouchers that were given last month, households can also enjoy YouSave rebates worth up to $760. Now, those eligible will also get between 1.5 and 3.5 months of service and conservancy charges rebates.
With the enhancements to the GSTV scheme and assurance package, I will have provided comprehensive help for the majority of Singaporeans this year. On average, for lower-income households, the enhancements will fully cover the increases in spending due to inflation and the GST rate increase. For middle-income households, the enhancements will substantially cover their increases in spending.
This year's budget is a balanced and a fair one. It actually has a lot of targeted help for the different groups, particularly the young couples, the larger and the middle income families, and also the lower income group. I think they are the ones who are most vulnerable during this inflationary environment.
The finance minister was very clear that inflation is going to stay. It might ease, but we're going to be in a high inflationary environment for quite some time. So the measures are very targeted at helping Singaporeans to cope while we bridge over to a more stable, lower inflation environment.
Moves are also being made to help families with children. They include more ballots for BTO flat applications and additional baby bonus cash gifts. The enhanced parenting support in particular will cost the government an extra $240 million every year. Sherlyn Xiao with all the details.
While the Housing and Development Board already sets aside the bulk of its built-to-order flat supply for first-timer families, this group today covers a wide range of applicants. So Finance Minister Lawrence Wong says specific groups will get a leg up.
We will therefore focus on first-timer families with children, as well as young married couples aged 40 years and below who are buying their first home. We will do more to help such families secure their BTO flats in a timely manner, including by giving them an additional ballot for their BTO flat applications.
This will be implemented later this year, with more details to come soon. Eligible first-timer families buying resale flats can look forward to the additional CPF housing grant, now increased by up to $30,000. More financial support too in a child's early years. An extra baby bonus cash gift of $3,000 awaits all eligible Singaporean children born from 14th February. The government will also pump more money into the Child Development Account, so parents could get up to $4,000 more to offset preschool and healthcare expenses. The one-off baby support grant that was initially for those born during the pandemic will also be extended to those born up to 13th February. One MP says these family support measures come at the right time, following feedback from her residents.
The bread and butter issues, many of them worries about are they able to take care of some of these children's finances, especially in terms of the educations.
To help lower to middle-income working mothers, their tax relief will be adjusted. Currently, they can only claim an amount that's capped at a percentage of their income. But for children who are born from next year, they'll be able to claim a fixed amount no matter how much they earn. More leave allowances are also on the way to help parents better manage work and caregiving commitments. From 2024, government-paid paternity leave will be doubled from 2 to 4 weeks. Meanwhile, unpaid infant care leave will also be bumped up from 6 to 12 days a year for each parent. Additional help too for lower-income families. The government is topping up $300 million to the ComCare Endowment Fund to provide them with the necessary social assistance. Also, Kids Start, which supports children in their early development years, will be scaled up nationwide. It's expected to support 8 in 10 eligible children in lower-income families, starting from those born this year.
The elderly also in focus in today's budget with a raft of support measures announced. Now, that's especially looking at lower-income seniors with their long-term care and healthcare needs.
And their retirement needs as well have not been forgotten. Rebecca Mateo with this report.
By 2030, 1 in 4 Singaporeans will be aged 65 and above, up from 1 in 6 today. While many are living longer, some spend their later years in ill health. And so Finance Minister Lawrence Wong says there's a need to ensure that seniors can live long and live well as far as possible and have ample options to age in the community.
For seniors to stay active and healthy or to better manage their existing chronic illnesses, they will need stronger support in the community, outside of hospitals and clinics. So as part of the Forward Singapore exercise, we are studying how we can enhance the range of care and support options within the community. This includes reviewing the operating model of active aging centres and examining how we can better strengthen and coordinate the providers in the aged care sector, which is highly fragmented today.
Meantime, $1.5 billion will go towards Medifund. The aim is to strengthen the safety net for those lower-income individuals and seniors who are not able to pay for their medical bills even after subsidies. Another $500 million will be added to the Elder Care Fund. The funds will support seniors who need to be cared for at home, at a centre or even at healthcare institutions. Even though nursing homes may be suitable for seniors who need more care and have little family support, Deputy Prime Minister Lawrence Wong says Singapore cannot rely on this as the mainstream solution. Many seniors actually prefer to be in the community and grow old in a place they are familiar with and right next to their loved ones. At least one social service agency says that while the support comes at the right time, preventive healthcare is still the way to go.
The change in the elder care sector towards upstream preventive health for seniors to be empowered, hopefully contributing, empowered, independent, mobile, and living in a community. And that move in the elder care sector started already in 2021.
To address retirement needs, CPF contribution rates for seniors will continue with its next increase next year. The government is also increasing the minimum CPF monthly payouts for seniors on the retirement sum scheme to $350. To help middle-income Singaporeans save more, the government will raise the CPF monthly salary ceiling to $8,000 by 2026 from $6,000 currently. Meantime, the Finance Minister says that these efforts will help to strengthen Singapore's social compact.
I'm joined once again by Associate Professor Eugene Tan from SMU School of Law. I'll pick up on a point you made earlier. You said money is a powerful enabler, but it's not everything. But if we look at the way money has been spent, say specifically on enhanced parenting support, picking up from what my colleague mentioned earlier, to the tune of $240 million every year extra on top of what we already spend. We put our money where our mouth is. And family is pretty much defined as getting married, and I quote from the speech, the bedrock of our society, young Singaporeans aspiring to get married and have children. So we put money into this and we define family as this. What is the messaging here?
I think the message is quite simple, that the traditional family, a man and a woman in a marriage, from which children are raised, is the fundamental building block. And so we saw, the measures, to promote family, pronatal policies, pro-family policies, having a very strong accent in this year's budget. And I think that's where sometimes, the balance could be seen as, being weighed a bit too heavily, on families, particularly young families. But I think it perhaps reflects the policymakers' deep concern about our declining birth rate or our birth rate, which is way below, the replacement level. And of course, the last 3 years of the pandemic, has meant that other priorities, had come first. And I think here now, there is an attempt to shift back the focus. But I think it also reflects the pain points, for young couples. So you look at housing, for example. I think there was that social messaging there. The idea to keep public housing accessibility and affordability relevant and refresh. So we are looking at the budget. Many measures that try to ensure, those policies, those institutions that have worked well for us continue to do so. So if you think about seniors, right, I would say that there was another social messaging, right, that we are now trying to raise the CPF contributions, for seniors. In a way, rolling back, right, policies from years ago, in which the contribution rates for employers and employees were reduced because the idea that older workers are more expensive. And if you talk about, trying to reach out to all Singaporeans, what about the assurance package, right? We saw a close to 1/3 beefing up, of the assurance package. And of course, that takes into account, the global, inflationary environment. So I think the social messaging is that, the government is prepared to put money, as you put it. But what I felt didn't come out as strongly was, what else do we need to do, right? Money enables us to achieve many of these things, but we need more than just money to be able, to ensure that we can uplift society, people can live with dignity. So I think, on the one hand, the welfareist trend, in our budget, the idea that people will have their basic needs taken care of, I think that has grown stronger. But I think in terms of, the social compact, what is it that we ask of our people to help to contribute to the strengthening of society? I think that remains, to be fleshed out, and hopefully we'll see that in the Committee of Supply debates.
Thanks very much for that, Professor Tan. Associate Professor Eugene Tan there from the SMU School of Law. Thank you very much.